do you think that when you look at the United States right now, the rhetoric over a slowdown just doesn't match the reality?
I mean, historically, Q1 has been the dog of all quarters. So last year and the year before that, significantly lower growth rates, and then that accelerates throughout the year. This year, we've started off with 3.2. Now, about 80 basis points of that is from inventory growth, but even if you strip out that, it's 2.5. Q1 is dire, as I said. So I think growth rates will probably see up to about 4% this year. The rhetoric, as you say, is consistently poor. I just don't see it. I don't see where it's coming from.
Okay, so 4% would be a pretty significant upside from where we're at today, though. Does that mean this is a time to be adding to equity positions in the United States, or still a bit cautious on the outlook?
No, I think that you want to be overweight equity in the US. I think you want to be very sector specific. So the historically, or for the past few months, hedge funds have been reducing down their net short positions. So this will only add to momentum as growth comes through. If we get Sino US trade resolution, which we'll talk about later on. But there are many things that point to potential pop in US stocks.
And Simon, Matt also has a question for you.
Yeah, hi Simon. So 4% growth for the year. Did the Fed then get it wrong when it comes to its pivot, suggesting that it won't, of course, change interest rates, increase interest rates over the rest of 2019? We also got the inflation data out with those GDP numbers, partially in the inflation number that showed things were weakening on the PCE. We're going to get some more details on that tonight stateside. But the market's moving to price in a cut from the Fed by the end of the year on the back of that inflation number, yet strong growth. So where does the Fed go from here?
Well, I mean, the Fed's in a real conundrum. I think inflation expectations are the thing that we all need to be watching, and they are declining significantly. So everybody was, just only mere months ago we were talking about inflation expectations rising. They've completely collapsed. So the Fed is in a real quandary. We're having significant growth, but we're having no inflation with it. This is, we're in a position that is quite unusual, a beautiful position to be in. But at the same time, it's one where the Fed needs to tread very carefully. If I was the Fed, and I've spoken about this many times, I would probably have slightly hiked faster and sooner. And now you would be in a position to cut should there be a slowdown, or just be in a position to monitor yourself. Neutral is where. I mean, there are many people now that just completely confused. I mean, the bond market itself, we're seeing 10 years going up and down like a yo-yo.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.